next up as a topic, blockchain for interbank payments and settlements. Run faster, safer, and further. So that's the question which will be discussed in the next panel. And I'm happy to announce the panelists in a row. First of all, Marco Kessler from SDX, Robert Eifert from Clearstream, Benjamin Richter from Google Cloud, Daniel Eidan from BIS, and the panel will be moderated by Tilmar Goos from Sul Payments and Gowd. Tilmar is the CVA's education working group chair, by the way, and very active, and the dreamer and the founder of the CVA Research Journal. Please welcome on stage.
Good afternoon, everybody. Please have a seat. We're having prepared a quite nice panel, what I believe is an interesting topic. So at this time of the day, I maybe don't need to explain anymore what is the CVA. However, inside the CVA, we have a working group education, which I'm heading. Inside this working group, we have one flagship project, is a research journal. So we define once a year a topic. We invite dedicated authors to write according to this topic. We compile the best papers in the end of the year and give this journal back to the industry for free download. And this year's topic is on-chain asset management. So if you're an author or if you're an expert, want to do an interview in this research journal, let's chat after the session and I explain it a little bit more. Now, today we want to talk about blockchain for interbank payments and settlements. In my professional life, I work for a payment processor, and obviously we have a mix of local payment acceptance and cross-border settlements using stablecoin. We put together quite an interesting panel, and I would like the panelists to quickly introduce yourself to give this panel a structure. Maybe Marco, do you want to start? A few words to yourself?
Yes, thank you, Tilmar, and hello, everyone. My name is, well, as you can see, Marco Kessler, Six Digital Exchange. I am the head of digital assets there, so responsible for products and services. And, well, I've been on this journey, I would say, since a long time, since the founding of SDX, close to 7 years ago, and I find a lot has changed, a lot has evolved since then. And the fact of being here today talking about this topic in this venue, I think it's a testament of how far the collaboration also came to be between the banking ecosystem, financial ecosystem, and let's say more crypto-native Web3 ecosystem. So, thank you.
I'll go next. Hi everyone, my name is Benjamin. I work for Google, specifically Google Cloud, and maybe you're wondering, like, how did I end up on this panel in between these more banking-focused topics? So this is my one goal. Hopefully when you leave the session, this question will be answered. But I'll give you a little glimpse. So Google is probably a search engine, as you know, but there's a lot behind this like simplified UI. There's a lot of global infrastructure. And when we look at blockchain technology, it's a combination of nodes that live on computers that are connected with each other. And this is something we believe we are really good at. We have a lot of experience in that space. So we are also putting a lot of effort into developing tools that make it even easier for others, other companies, other organizations and developers to also tap into our experience and focus on building cool decentralized applications and having less to worry about what's actually happening under the hood and connecting all these nodes and computers with each other. But more on that a little later.
Please, Daniel.
Very cool. All right. Hello, everyone. Hello. Thank you. I know it's late in the day, so hopefully we can be entertaining and educational at the same time. My name is Daniel Eidan. I'm an advisor and solution architect with the Bank for International Settlements. I've been with the bank for almost 5 years now. This is my second position. I was out in Hong Kong for a little while, and now I'm based here out of Switzerland in Basel, where our headquarters is. For those of you that don't know the BIS is colloquially known as the central bank of central banks. So our services are given specifically to central banks. We're owned and operated by the central bank community at large. And the role of the Innovation Hub in particular is really to connect between innovative technologies and the innovation agendas of the central banks and the local regulators. We have 7 centers around the world, and each center has a little bit of a different flavor depending on the mandate of the local central banks that we're working with. My background is computer science and engineering. I focus a lot on blockchain and distributed systems, and I run a lot of our cross-border payment projects at the Swiss center at the moment.
Good afternoon, everyone. My name is Robert. I'm working for Clearstream. I'm based in Frankfurt, and I'm actually happy to be here in the Crypto Valley for the first time. And it's been a great day so far, and looking forward to this panel. So maybe a bit of background to Clearstream. All of you, of course, heard about Clearstream. We have 3 franchises. We have the domestic CSD in Germany, the domestic CSD in Luxembourg, and the international CSD, where we do co-issuances with Euroclear in the Eurobonds area. I'm working in the digital security services area, where we have rolled out a platform called D7. I think we have almost issued 1 million securities on this platform digitally. We also have a DLT component on the platform. And we're also looking to extend to other asset classes like Bitcoin and Ether. You might have seen the announcement 2 weeks ago. We collaborate with Crypto Finance. They're also part of Deutsche Börse Group. And it's been picked up by the market quite well. Happy to be here. Thank you.
So as you can see, we put together a high caliber panel, everybody coming from a different institution, obviously sharing their own opinion and approaches towards blockchain technology. So now how this panel will continue, I prepared in the first step a specific question per panelist, and then later a question where you all can give your answer. Maybe now, since we are here in Switzerland and SDX is at the forefront of the digital exchanges and obviously a known player in the industry. Maybe, Marco, how do you see the blockchain changing the way interbank settlements are conducted?
Thank you for the question. But very, very many ways, I would say, obviously. There are different ways to slice this question or to answer this question. Let me bring maybe 2 cases, 2 examples. On the one hand, I think from a technical perspective, you have to you consider that blockchain, different shapes and forms of blockchains, allow for mutualization of the technical infrastructure, allow for a way to share a technical layer, technical infrastructure to move value, whatever value, you know, and then there are different ways, regulated, non-regulated, assets, cash, and so on. And this is very important. This is a paradigm shift, I would say, because, I mean, if you're a CTO in a company, I mean, one of the things you care about a lot is the so-called total cost of ownership. And, you know, moving away from each institution building their own and maintaining their own decade-old, you know, running machine, which barely anybody understands by now anyway, you know, that's a big deal. That's really a big deal that moves the needle, seriously moves the needle. So that's a very, you know, economical answer, so to say. Another one is the exciting one, I would say, because it really opens the door. So blockchain and the application of blockchain on payments and settlements really opens the door to new ways of offering services, products and services. I mean, you know, everybody talks about, I'm sure you heard it hundreds of times, about programmability, composability, you know, instantaneous movements and so on. Those are all key properties, key elements, you know, fundamentals that you need. And when you put them into life, into action, then you can get to the real cool stuff, you know, like offering new services that previously were conceivable but not economically viable. We are working, for example, on the application of fractionalization. You know, imagine being able as an investor of any kind, of any tier, so to say, being able to, you know, on your phone to type up your investment preference, your very own personalized, customized investment preference, you know, and then just push the button and get it done instantaneously, obviously. I mean, this is possible. This was possible 10 years ago, of course, but it was way too expensive. So normal people like me could have never had a chance calling my client advisor and asking them, hey, can you get this done for me? You know, I'm to a small number, basically. But thanks to this technology, I mean, these kind of things become possible. You know, you just need to put it into action, and I think now is the time.
I like what you said in terms of innovation, and we all want to tap into a new market, but this, of course, also comes with associated risk, right? If you're one of the first player, you start doing business in a new asset class, right? You suddenly face different problems in terms of regulation. Now then, since you're at the forefront, we have differently regulatory changes. How does SDX address and manage those challenges?
Yeah, I mean, well, we are a regulator of financial market infrastructure, so by definition, I mean, we work very, very closely and very positively together with the Swiss regulator, FINMA. And of course, that allows to resolve and find ways to fulfill all the requirements. And I call them features, not requirements, because I think people may see them as a burden, but I see them as a value proposition, actually, especially at the institutional level. So I wouldn't really talk about kind of challenges, but more, if I look more at the international level, I think something that is a challenge is for sure the harmonization. If you want to scale these globally, or at least internationally, with neighboring countries even, then I think you need to be able to passport or to at least have compatibility between things, like between concept of a DLT security. We know what it is in Switzerland, we have a definition for it. What about France? What about Germany? They have their own definition. Are the two definitions compatible? To what extent? And so those are key questions, I think, that will be important to continue on addressing, and they are being addressed, which is a good thing, I think.
Absolutely. I can just, from the fintech perspective, look at this and say, hey, actually regulation is not so bad. It gives me, as somebody who tries to run a project, the legal security that what we do is good. Plus, it gives the investor the chance to invest in a project and have the regulatory clarity that things are going according to the rules, right? And you mentioned one thing, international. So, Daniel, Bank of International Settlements. I'm aware that you, or your organization, has been exploring blockchain for central banks. Could you give us an insight about maybe the biggest advantages and risks you're facing?
The biggest advantages of risks that we face bringing that type of technology into the central banking sphere. Yes. Okay. I guess the most important thing that I'll mention is my views are mine only and not necessarily the views of the bank. So I have to remind myself to always say that before I say anything that I regret. I think the advantages and the risks are kind of the two opposite sides of the coin. I think Marco kind of gave some insight onto what a leading organization here in Switzerland is doing. When I think about specifically blockchain distributed systems, I think it's a lot about kind of the tokenization thesis. And at a high level, that thesis would say that today all of the value is stored. If we think about kind of the financial ecosystem, it's a huge kind of network of networks, and all the value is stored at the nodes, and the edges that connect the nodes are just messaging on movement of value between the nodes. But the value actually stays kind of contained within their siloed ecosystems, and that silo is technological, it's regulatory, it's legal, and so on and so forth, and a lot of the costs are actually a function of that. Going along the same analogy with Marco with distributing the cost and distributing the platform, when you start distributing the platform, you start harmonizing as well. So there's a lot of good reasons that are catalysts to bring distributed systems or central bank money onto distributed systems or onto blockchains. And I think the three biggest things that I would highlight, the first one would be digital assets. So the more digital assets are adopted, the more you would need a form of central bank money that is native in that world to do proper settlement, because central bank money is the safest settlement asset that exists. The next one I would say is tokenized deposits or stable coins or things that are derivatives of central bank money or private money that's issued on top of central bank money. So again, the closer coupled those two things can be, I would say the more value proposition there is in that ecosystem. And then cross-border payments is another pain point and another place where there's a lot of value to add by bringing these systems, these tools and these technologies into traditional finance. When we talk about the risks, I mean, the risks are, again, they're kind of the flip side of the same coin. And I can give a couple of examples. When we think about the network effects and interoperability of these type of systems, the going perspective is the bigger the network, the more interoperable things are, the more value there is to be associated with the network, which is absolutely true. But the flip side of that, and the thing that the central banks and the regulators are often concerned about, is what happens on a rainy day, what happens on the 0.1% that something goes bad, and where are the circuit breakers that if something collapses in one side of the system, there's a circuit breaker that doesn't cascade into another system per se. So wherever there's a value, there's usually a risk associated as well. And I think that a lot of the work that we do at the Hub is to move this away from an analytical exercise where we just look at systems outside of the central banking community, and we bring them in and we try to build tools that the central banks understand in the context of central bank money and central bank services so that we can evaluate ourselves what are the risks and rewards and be able to kind of move forward in a measured and reduce the risk associated with this type of innovation. I can bring a lot of examples, but I think that that's kind of the...
What I think in particular is impressive, first of all, of course, you here on stage representing the BIS, but I have been on several case studies actually what the Hub research is at the University of Zurich. So very much positive innovation. You guys look at it, which I, coming from the industry, particularly like that traditional institution pick up and try to integrate this in a central bank context. Now, we have another traditional player here with Robert. And since Clearstream plays the major role in traditional post-trade service, how do you see the blockchain component being complementary or disrupt existing settlement?
Well, I would say it's definitely complementary. First of all, it's a technology we put into the mix, right? We don't say DLT is a silver bullet. But it's definitely an important tool in the mix. And we have participated in the last year in the ECB trials, right, to also showcase this. We've participated in around 10 use cases with all solutions offered by the central banks to really experiment with settlement on-chain and with central bank money, which is key for us, right? So yeah, I would definitely say that's something we're closely following. We're investing. Deutsche Börse, Clearstream being part of Deutsche Börse Group, it's on the agenda also for our Horizon 2026 strategy. So we have full backing to further look into this technology. But I would also say in Germany, with the E-Securities Act that was implemented in 2021, we already see a big step towards digitization, dematerialization, right? On our platform D7, it's scaling, almost processed 1 million issuances, right? So that's the one step, and then the next step is really to identify the use cases, the business cases for the DLT on-chain transactions.
Yeah, I want to double tap on what you said, since Clearstream offers post-trade services. How would you see, or what are your concerns in adoption in terms of security, post-trade, on-chain services?
Level of adoption, I think it's really after the finishing of the ECB trials, we really need a continuation. So we have on the one side, we have the security leg, right, on-chain, and then the cash leg that's provided by the ECB. They promised, right, that this will come in rather months than in years. So that's, I think, very important for the level of adoption. And yesterday I was visiting the Crypto Assets Conference in Frankfurt. We also had Piero Cipollone from the ECB, and he actually considers himself being rather a fast central banker. So I think we are on a good track here.
Those three entities now, I like when we summarize this. Adoption is common, you take care about it, you see how you use this technology inside your organization. But obviously now looking more from the technology side, Benjamin, when we talk about security and scalability, of course, we know that that is an issue on the blockchain level. How does Google Cloud tackles those challenges?
Yeah, I mean, when you shared this question with me up front, I actually wanted to challenge it a little bit, because I think security, that's kind of inherent of blockchain technology. That's where blockchain technology stands out. It's a trustless system. That's why, as long as it works, there's a lot of extra layer of security. You don't have to trust someone else. When it comes to scalability, as I mentioned initially, this is, I think, where we are really strong at. Like, we have 9 products now that have more than 1 billion users. Like, and blockchain, the technology also wants to span across the globe. Like, that's the idea, no? To really connect everyone, make it decentralized, make it accessible. And when we looked at this whole area, we also noticed that stablecoins alone saw like a big increase last year. I think the amount of stablecoin transactions tripled last year. So there's some public information, up to $5 trillion were transacted via stablecoins last year. To give you a reference, Visa has, I think, 13 trillion of transaction volume per year. So stablecoins are already like halfway there. And what I'm trying to say by this is that we can discuss as much as we want here on stage about blockchain kind of changing how international settlements and payments work, but it's already happening out there. Like, stablecoins kind of just started doing this by itself. And that's kind of the interesting piece where we believe, okay, like, this is happening, there's a demand for that, and also there is a good reason why the demand exists, because traditional payment methods, they have a lot of friction. So if you, again, look on a global scale, I think there's several trillions of dollars that are kind of lost in fees by just 2 people exchanging money with each other, and that's a space where we looked at. Yeah.
That makes sense to me. I mean, of course, everybody knows Google Pay and all other solutions you have. And how would you describe how the cloud infrastructure enables faster and safer transactions?
Yeah, exactly. So when I said we looked at this, we didn't just stop there. So since a couple of years, we have a dedicated engineering team building blockchain-specific products with the idea in mind to make blockchain adoption easier for other organizations. And this week, literally 1 hour ago, we announced that we launched our own ledger. It's called Google Cloud Universal Ledger, and it allows banks to do cross-border wholesale payments, quite frictionless, low fees, and easy to adopt. So as I said, hopefully, maybe in the beginning you were wondering why I'm here, would be happy to hear feedback. If that's something you're interested in, please find me after the panel. Just want to make it very clear. But the idea is really that we are really good at building global infrastructure, and banks can do a lot of other things a lot better. And we want to help banks to kind of do these transactions with each other across border, and or at least offer a way for that to happen easily. It's a permissioned blockchain, so it is a blockchain, but only you need to have like certain access requirements, at least for now, until regulation might change. And it's quite flexible. Like, in order to onboard, it's a single API call. So yeah, happy to tell you a little bit more maybe after the panel.
So what we can see, there are things cooking in the background, and I can only imagine if Google comes out with their own blockchain wallet, this will definitely drive adoption of all the user base Google has, right? If just 1% takes over or funds the wallet on chain, fantastic use case. Now looking in the light of the time, I prepared still one general question where I like to pick your brain individually, giving you a different perspective from the institution you're representing. So what do you think is the biggest factor holding back mainstream adoption for interbank payments and settlements? Maybe we can start with Robert.
Interbank payments and settlement. Yeah, I always need to bring in also the perspective of securities, right? So because we at Clearstream, we have, over 20 trillion assets under custody, and what we do is settlement, right? Delivery versus payment. And the payment side is only one side. And then the security side is the other side, of course. So I think in the EU, regulation provided now with MiCA is a big step, and definitely for all the entities active in this space, it provides a clear vision and also a level of comfort.
That makes sense, especially the experience with the market it comes. And I think one step closer going towards this direction of adoption is what the biz does, and maybe Danny, you can add a few more things, is of course working with the technology, working on use cases, trying to implement. Where do you see the challenges of adoption generally, Daniel?
Yeah, so the question specifically, what's holding back adoption of interbank payments on blockchain systems? I don't think anything's holding it back, to be honest. I think we tend to kind of underestimate in the short run, underestimate in the long run and overestimate in the short run. I think we're on track for adoption at large. But I mean, let's think about how we do interbank payment systems today. There's real-time gross settlement systems. Real-time gross settlement systems are alive and active in most modern economies. They have a lifespan of about 20 to 30 years. So for most of the countries that implemented RTGS systems in the 90s and early 2000s, they're kind of coming up on that transformation, and they're building for the next 20 to 30 years. And we're likely to see a lot of these blockchain or tokenized or distributed systems incorporated in the next evolution of interbank payment systems. So I think we're on track, but I think there's still a lot of things that are complex when we think about these systems relative to the systems that exist today that are being figured out as we go. One of them, for example, is when we think of a system that's always on 24/7, even though that's great for adoption, what does that do to monetary policy transmission, for example? What does that do to how we calculate remuneration and interest rates, things like that? And when we start thinking about how these systems interconnect with each other, again, in the context of cross-border payments, or how a system like this would support clearing and settlement for digital assets, I mean, there are details there that really need to be figured out because the behavior of these systems is, at its core, fundamentally different than a lot of the centralized systems that we have today. So I don't think that there's anything holding us back. I think we're completely on track, and I think in the long run that will be self-evident.
Yeah, and there are sometimes those questions, do we really need a chain, right? Do we not just create a problem and have a blockchain, or what was the real use case here, right? Another good question is, hey, great 24/7 markets, but do I want this, right? Maybe it's good that we have Saturday and Sunday off, right? Maybe Marco, I haven't heard from you for some time. Where do you see the biggest challenges holding back mainstream adoption?
Yeah, I think, well, first of all, I fully share the view of Daniel. I think, especially if you've been here a while, you would have witnessed the evolutionary steps which took place over the past years. So I think we are really on track. But having said that, how did we get there, right? Especially in Switzerland, I think you need to look at what are the ingredients you need to get to this point where we are today and to go into the future. And some we mentioned already, you need regulatory clarity. We have it, tick the box. In Switzerland, at least very much so, I find. You need to have a high quality, best quality settlement asset. And guess what? We have it in Switzerland, tick the box. I mean, you heard in the morning the keynote of Robert from SNB, Swiss National Bank. I mean, the Helvetia pilot is a unique pilot, I think, in internationally, actually, at this level, at the level of progress, where we can use productively wholesale CBDC provided by SNB. In a unified ledger. I mean, referring to what Robert was saying before, at SCX we have a unified ledger of securities and cash on the same ledger. Opens many doors. So you need that. We got that. Then you need to bridge the traditional world with the digital world. No digital islands. No experiments which are isolated somewhere on whatever technology. And we got that by building, a tokenization of existing assets and vice versa. So this all sounds easy, but this took years to achieve, and we did. So now we really get to implement, and we see a paradigm shift again, where banks are really voicing their desires and their expectations in terms of use cases that you mentioned. Proactively, because they recognize, okay, we did the groundwork, like building a house, you need to start digging the hole, That's been done long ago. So now we can get to talk about the things which everybody wants to actually talk about, but few have the preconditions for actually getting them done at the institutional level, like we have in Switzerland, and obviously also with SDX.
Now, what is great to see is obviously that those institutions, they look at the use case, see how we integrate this, but when I look from what we're doing in terms of payment processing and cross-border transaction, this use case does not really exist in continental Europe, because if I send a SEPA to Germany, nobody cares, right? But in Latin America, all the countries are fragmented. They all have their own payment system. Getting local currency BRL or MXN into US dollars, sending it cross-border, ladies and gentlemen, I can tell you it's a nightmare and it keeps me awake all night. So, and last but not least, of course, Benjamin, from your perspective, where do you see the blockers for mainstream adoption?
Yeah, I mean, I don't have a new perspective beyond what I already shared. I think the stablecoins are a great example how it's, I would say, like a silent evolution. I mean, anyone could basically invent stablecoins and start issuing this kind of new type of money. And these numbers that I mentioned before in terms of transaction volume, just give one more reference. I think 1% of all US dollar is now held in stablecoin. Like, this is really a significant amount. Like, if you think about like how much is controlled by the central bank and how much is in stablecoins. And I think the adoption also, as you just said, it's multiple steps. There has to be, the technology has to advance, people need to be educated about it, and then they have to, and the last piece, of course, or not last piece, one important piece is regulation. And I feel like this is still, even though in Switzerland we have it solved, but when we talk about cross-border payment, it needs to be solved at least in other countries as well. And that's definitely where stablecoins are lacking. And that's why they're not like the only solution to figure this out. But yeah, like it's an exciting time to live in. I mean, happens every year, and probably when we meet again next time, we will already talk about another evolution in this. And even if, I mean, we all want to hopefully drive this, but it also happens in a way naturally, I would say. Yeah.
Yeah, absolutely. When I compare this panel nowadays to the panel we had maybe already 2016, clearly we see the TradFi guys are jumping in, they see the value, right? I think maybe the next panel for the next conference we have is somewhere, how does BTC work in government treasury, right? But summarizing, say, I see that the traditional players, they jump on, they have their use cases, they research, Google with their own technology, they try to get a foot in the door, and I'm sure as a tech provider they will do so. And once they do, I think it's clear that it is here to stay, but even more afterwards. Now we almost finished with this panel. However, as a little thank you to the panelists, I prepared a little gift for you if you want to stand up and get your copy.
Well, thank you.
Please applause for the road. And it's a book I wrote together with a professor in Thailand from the University of Siam Science and Technology College, Dr. Pornfisud. And I encourage you, somebody could take a picture, maybe Alex, you, with everybody with the book in the hand, that would be great. And then I wish a pleasant afternoon, and for any question in terms of the asset management research, please let's meet outside of the room. The photographer is already here, perfect. Thanks, fantastic.